Hi everyone, Brian from Bear Bull Traders here. It's February 26th. It's the weekend, wrapping up a really wild week, and that Thursday open was the opportunity I was looking for to get back invested in the markets. As you were probably watching, I was sitting in a lot of cash and just waiting for an opportunity, and that gap down was amazing. So what's going to happen next week? Boy, who knows, but let's take a look at the week that went by, and then we'll take a look ahead and try to figure out where things might be going next week. And we'll start out with reviewing last week's action, February 21st, week of, and of course, this Russia-Ukraine situation, tragic situation, did take center stage last week. We had the big sell-off into the open on Thursday with the invasion, and then markets came roaring back sort of after there was some certainty, I guess, if you want to call it that. But overall, the week actually wasn't too bad for the indexes. The Dow was just marginally down. The Qs made up a lot of gains back on Thursday, Friday to close up on the week. Same with the SPY, and same with the IWM. The Qs and the IWM seeming to be doing the best in this situation. So what about areas of strength and weakness? We did see utilities and healthcare seem to be strong sectors throughout the week. Of course, these are a bit of safety trades. Consumer cyclicals or discretionaries were weak, and that's, of course, not to be unexpected. When people start seeing sort of the basic commodity prices rise, food, fuel, they cut back on things that they don't need. So that would be the reason the consumer discretionaries are down, and I would expect that to continue into next week. Financial services were weak, despite the fact that we are still creeping up on the yields. You can see here the 10-year Treasury note rate closed up marginally. It wasn't really up or down on the week, just up a little bit. And the dollar, of course, safety trade, when we had that invasion news, really ripped on Thursday and gave a little bit back on Friday. Okay, and before we get into some charts here, a quick ad for my book on Amazon, How to Swing Trade, Rules, Routines, and Strategies that I use as a swing trader to make profitable trades. So let's skip right into the charts here. And always we like to look at the Treasury bills yields first. And you can see here's the 2-year, this nice cup and handle I've been talking about, and just this continuation move up as we get closer and closer to the 10-year, and keeping an eye on this, of course, because if the 2-year rate crosses the 10-year rate, goes higher, it's often a indicator of a pending recession. So don't want to see that, but we're just we want to keep an eye on that at the same time, and we're still trying to break through this 2 level, but the trend is still up on the 10-year, and expect rates to go higher. So the transports, again, all these indexes are going to look pretty much the same. You can see the transports 3 days down, Monday, Tuesday, Wednesday. Then we had this big gap down at the open on in pretty much everything, news of the invasion. And then we just took off and ripped higher. And you can see this, this is a fairly constructive pattern. You can see here Friday we actually ended up higher on the day. We'll take a look at the weekly here. So you can see here we sold off really hard. 2 days, 2 days of trading made up for these 3 days of losses, and almost made up a 4th day of loss here. So this is when you see a return, when a move like this is fairly constructive and positive for the bulls. And a lot of these indexes are going to look the same. The Dow, again, 3 days down, didn't quite get back up to cover this. It was still down on the week, but not that much, not by that much, 0.06%. And we recaptured an area of support, which was 34,000. So we lost that level and then came right back up and recaptured it. The Qs, really same story. We pretty much made up what we lost in 3 days over 2 days. And on a weekly, we were up 1.25%. Volume was pretty substantial on, and has been on all these days. This comeback on the week was pretty good. The SPY, really same story, and we're going to keep repeating myself here, but again, up 0.81% on the week. So we made up everything we lost in the beginning part of the week. And the IWM. The IWM seems more range bound right now. It seems to be settling back into a range here, this sort of 205 level, sort of 190 level. Seems to be an area we're chopping in. The IWM seems to be performing a little bit better than some of the other indexes right now, not selling off quite as hard. We did still get that same pattern, but you can see here 3 days of selling, 2-day comeback, and finished well above where we started, 2.25%. So not 2 point, on a week we actually finished up 1.5%, excuse me. So pretty constructive there. And the VIX. The VIX had a pretty decent gap up there on Thursday with the announcement of the invasion, but we sold right back off as we went into the latter half of the week. But I think VIX is still going to stay elevated as we continue to look forward to the March Fed meeting, which is where they're going to find out how they're going to deal with the inflation going forward, and particularly complicated by Russia's invasion of the Ukraine and adding more pressure to prices, particularly in Europe, but probably will be felt globally. Bitcoin really just chopping in this range. This 37,000 level seems to be fairly important here, and if it does sort of start to roll over again, it has been rolling over. You can see here this double top. Maybe making a bit of a head and shoulders. Here's your one shoulder, here's the head, right shoulder. If we do start to break down here, probably might be a short on a number of different stocks that are dependent on Bitcoin for their price, like coin. And here it is on the weekly. You can see here we are still trying to hold this this upper bar of the channel that we've been trading in and tried to break out from. But it's not actually looking it's not looking that great actually. So we'll have to keep an eye on it, see if it can hold this 35,000 level. So let's take a quick look at some of the things I'm watching here. Gold, as you know, I've been in gold and silver long, and really had a great pop up here on Friday, or Thursday I should say. And I ended up selling the rest of my position on that big pop. So you can see here, this is Apple. I did trade Apple in this big sell-off. Bought it down here and just held it through the day and then through the Friday. But you can see here, Apple, here's where it started out on the week. And you can see here where it finished. So it was well off the, recapturing all the price that it lost during the week, which shows a bit of weakness when you compare it to some of the other indexes. The Qs, for example, which did manage, and the IWM, which managed to eke out a gain for the week. Apple was well down on the weekly, so a little bit of weakness there on Apple, which I was a little bit surprised about. I thought this would have been one of the ones that would have actually ended up on the week. So Amazon, you can see here, it almost got back up to where we started the week. Again, we seem to be sort of range bound here, so I'm looking at this 32,000 level for Amazon as being upside. I think upside is going to be capped as we wait for the March Fed news. I think traders are going to be reluctant to really step in and bid things up. We did get this nice bounce back, but I'm thinking, selling calls, I should say, at levels and letting them aspire worthless might be a good strategy for the coming week or two. Here's gold again. Sold the rest of my position on this big pop, and just leaked out the rest of it. And now it's seems to be consolidating a bit here. There's this level here that we did break out from, came right back up to on Friday. And I'm going to be keeping an eye on it because we might get more of a pullback here. We might get a pullback here to this 20 moving average down to 32. So I'll be looking to play one of the short ETFs on gold like DUST, possibly if we get a sell-off. Here's a stock that you can probably play if Bitcoin does drop. This MicroStrategy, very heavily invested in Bitcoins, and they're going to fall really hard if this if Bitcoin rolls over. So something to keep an eye on here. Here's your upper level. We did get this this gap down, and we did fill it, which is a pretty common pattern. Eventually get these gaps get filled, and so you can see here we did fill this gap, and this obviously this 450 level is definitely an area of it's going to be resistance. PayPal finally found, you see had a big drop here, finally found a bottom. We've got a long way to go to fill this gap here. Eventually it probably will fill the gap, but I think there's going to be an awful lot of chopping and churning sideways before we even get up close to filling this gap here. But again, I think the upside is capped after this nice bounce back. Really got quite oversold here. You can see where the RSI was. See stochastics way down here, so maybe we are going to get a bit more of a move up on PayPal. Roku, again, talk about filling the gap. You can see here we filled the gap. But again, this could be an area where we're going to fail. Possibly if we do get through this moving average, 160 or 165 could be the next level. That there'll be some resistance. So again, selling some calls up here, letting them expire worthless. Silver, again, I had some silver in my accounts and again sold them. Same comment as gold. Big reaction from the invasion and then the sell-off. And the SOXL, the semiconductor index, you can see here, 2 days we recaptured the 3 days of losses. So again, something more that I would have expected from Apple. But again, volume was pretty light on Friday, even though we did have another up day. Big day on Thursday, big reversal day, and a nice turn on this on the stochastics. So I would expect, whether you want to play AMD, NVIDIA, you know, the main semiconductors, or just take a flyer with the XOXL. We could be looking at sort of a, you know, a retracement to maybe the 200-day moving average somewhere around 48. And Block had a big earnings report on Thursday after the close. Really nice move up, but we may have set a top here around 120. If we do pop up on Monday, whatever the high is there, that would be a good place possibly to sell some calls. Again, I see I'm using a call strategies right now a lot because I'm thinking this market is going to be a little bit directionless, so maybe just collecting premium might be a better strategy for the coming weeks up to this Fed meeting versus just holding on to shares and hoping they find a direction. And Tesla, again, Tesla, same comment as Apple. You see here on the Friday chart, really didn't even come close to breaching Monday's opening price. And so pretty good indication that Tesla's the stock here is weak, and you can see here we're down below the 200-day moving average. Couldn't really hold on to that at all. So not looking for any strength in Tesla in the immediate future. The USO again, the oil fund again gapped up, sold off on the invasion news. WCC, I've been watching this one, playing this in a range. It's really, when it gets down to around this 115, 112 level, good place to pick it up. Comes right back up. This is more of an infrastructure type play. It's going to do well. And another one that I like that I haven't put up here is Cisco. Cisco, the food company, not the technology company. And you can see here, I've been playing it in this range, and I bought some again on Thursday, and now it's just really breaking out here. This is a kind of a reopening play. They're a supplier for restaurants, food service, any place where you get food service, you've seen their trucks around delivering food and beverages to various outlets that serve customers. So if as we start to open up again, people start going to sporting events, concerts, etc., restaurants, Cisco is poised to do pretty well. So I'm invested in this one again. So that's it. And we can wrap things up here with this look ahead summary. Again, the Dow, it did drop below the 34,000 level, which I had flagged as an area of support last week. Dropped below there and then came right back up Thursday, Friday, and we're essentially back there right now. So I would say any push higher would have to respect that level. And pretty much you can say that for all the indexes we had. The Dow, which I flagged at 340, or the Qs I flagged at 340, the SPY flagged at 430, all lost those levels Monday, Tuesday, Wednesday, and then just came back Thursday, Friday to recapture those levels. So they remain key levels. And the IWM support at 195, and pretty much the same comment as the Dow. We sunk and then came right back up again. And resistance again is 210 and all these levels. So again, what are we watching for next week in terms of economic events? Well, inflation and the Fed response to that is going to keep the markets a little on edge until we get through the next March Fed meeting, which is what everybody is anticipating, hearing how the Fed is going to start to their tapering and their interest rate increasing. Of course, the Russia-Ukraine situation evolving, but now that the sort of certainty is sort of priced in, it doesn't probably won't play as big a role next week. And we still have earnings. There's still lots of earnings coming up next week. Got a lot of interesting ones: Lucid, Zoom, NVAX, and Blink after the market close Monday, and Target, Baidu, Kohl's before the market open, CRM, SoFi, AMC, Plug after the market close Tuesday, and we've got Dollar Tree and Abercrombie on Wednesday morning, Snow and ChargePoint after the market close. So lots of earnings that'll keep things interesting for sure, and that'll be it. So if you hope you're having a good weekend, and of course we will be back in the trading room on Monday morning, 8 o'clock, live on YouTube if you want to join us there. And then of course trading the market open for our members at 9:30. So again, everybody, enjoy the rest of your weekend, and we'll hopefully see you on Monday morning. Bye for now.